in the stock market, and today's inflation report clearly contributed, if not even makes, the most bullish scenario for now. Now, there are some serious risks, which I'm going to talk about those risks at the end of the video, but here's something crazy. You might remember going all the way back to the end of 2022 when Kevin said, I don't know, folks, I think we're going to have this crazy Nike swoosh recovery, and it's going to end in some insane euphoria. If you remember, my thesis for that was people aren't going to believe that inflation is going to come down. And the basis that we used back then, 3 years ago, was that housing inflation would flatline. And folks, it has finally happened. Now, it took way longer than anybody expected. And it is a miracle, an absolute miracle, that the labor market has not collapsed yet. But that's where we stand today. And it's really remarkable because today's CPI report told us exactly this, that owner's equivalent rent moved only 0.1%. This is the lowest that we've seen since January of 2021. And folks, look at the Nike swoosh. It doesn't matter. Liberation, the Chinese or the Japanese carry trade, none of that stuff matters. The Nike swoosh is holding. We are just on the perfect path of the Nike swoosh of print, 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 print money. In fact, if you look at the Nike swoosh, we haven't even had the euphoric part yet, which is crazy because everything is at all-time highs. Now, does that mean we could be purely and squarely bullish? That depends on the time frame. We're going to talk about that as we review some of the data here. So, first, CPI this morning, 0.1 lower than expected, which is exactly what I predicted in, of course, the Alpha report. Now, again, I feel like people won't believe this. Like the last 2 days I did the Alpha report, I put it together, I sent it to course members, even though I wasn't publicly live streaming. I didn't even get a video out yesterday because I was flying back home. It's so great to be home. And I don't think people will believe it. But yesterday, I'm like, hey, the number to play today, like we go bullish. Yesterday I say this, the number to play today is the entire market goes bullish if AMD holds 232. Look how many times we bounced. Now, it wasn't perfect, maybe within 20 cents there. But look at that. That's like 4 or 5 bounces on 232. And that was such a bullish confirmation in addition to, oh, Trump's going to release the CPI. Of course it's going to be lower than expected. Duh, they already have the damn data. So he knew exactly what he was doing. That's why we said in the Alpha report, like, hey, this is bullish, bullish, bullish. And look at AMD's launch off of this. So absolutely wild. But wait a minute, why then are we not seeing the 10-year Treasury come down more aggressively? Yes, well, that's because we don't have enough of a CPI collapse to actually get us really, really rapid cuts.
I don't know exactly if that's why, but hey, I don't know why, so at least he has an idea. I'm gonna do a quick breakdown here. Definitely gonna be projecting our voice because otherwise these videos don't get any views because people can't hear. So that is the MO, and let's get started. All right. We do have a gap up in futures this Sunday as of the time of this live. And let's talk about MAGS, aka the MAG 7. So here we go. That's the chart. Looks pretty good. There is one stock that is about to break out. It is an ETF and it has a lot of earnings this week. So I'm talking about ticker MAGS, MAG 7, Meta, Microsoft, Apple, Amazon, Google, Tesla, and Nvidia. 5 of those companies have earnings this coming week, late October, and I think now is the time to buy this stock. I'll tell you exactly when I think is the best time to buy it. Hint, after the majority of them release their earnings. So you're not betting. This is not financial advice. Let's jump into a little info about these companies, recent news, and why you want to buy Mag 7 now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here we go. This is the chart, and you can see immediately why this is interesting. We have a level here around 65 that we are above. Doesn't move a lot. It's a slow mover. It's safe, you could say. And if you look at futures as of Sunday, October 26th, we gapped up. There were some China-US trade talks that went well over the weekend. I didn't dive deep into them because I knew that futures would just tell us how people are feeling about the market, and they're feeling good. Same goes for Bitcoin and Ethereum, gaps up. Those don't always track the market, but when they do, that's a bullish signal. And if we look at these individual companies, Meta has that earnings on Wednesday. Microsoft, earnings on Wednesday as well. Apple recently broke out to all-time highs, earnings on Thursday. Amazon, kind of holding in there, earnings on Thursday. Google, doing pretty well, back over this level from late September, earnings on Wednesday. Tesla, this sell-off was weak as compared to the market, so the market went up on Thursday and Friday. Tesla, someone big, sold a lot, and it's not a big deal. It just means that this is still in the chop zone. So as opposed to IBM, which had an earnings reaction that was initially poor, gave it all, got it all back, I guess is the better way to say it, and then took off. Tesla didn't end up doing that, okay? It got back up there and then sold off some. So 450 remains the important level for Tesla. And then Nvidia, to round out the Mag 7, has the last earnings November 19th. And as always, also is the indicator of market strength, given it's the 2% of the S&P, the $4 trillion juggernaut. So why buy Mag 7 on Wednesday? Well, I don't think you want to gamble into Microsoft, Meta, Apple earnings, right? I guess Amazon is actually the company that, no, they both have Thursday earnings. Wednesday, I think, it's hard to keep track of all these, but yeah, Google has Wednesday earnings. So if Google, Meta, and Microsoft report relatively well, and you see a reaction not like Q2 earnings. Q2 earnings was not good. Meta, one of the best Q2 earnings reactions, and it's still sort of chopped around. Really, none of the Q2 earnings matched Reddit's, okay? So if Microsoft, Meta, and Google can have okay earnings reactions on Wednesday, I think that's worth buying Mag 7. I mean, this is obviously going to move on those reactions, but you're still relatively close to this pivot level. You have the benefit of already seeing those reactions come out. You're not gambling. You might be betting, but all you're really betting on is Apple earnings, which Apple's already at all-time highs. So it's less so of a bet. And then Amazon earnings, which, Amazon's been doing okay, holding on to this 200-day moving average. of the Mag 7, it's probably the worst performer, only up 45% or so, whatever it is. You can see it right on the chart. It's been underperforming the SPY lately. So, that earnings could go the way of its Q2 earnings here. We don't know. Nobody knows. But if it does, you do have Apple to sort of balance it out. So it's a little bit of a challenging situation always. A couple weeks, 1 week before the main earnings. I guess 20% of the S&P report this week. But what are you going to do? Just completely ignore opportunities? No, this is an opportunity. It's not exactly like Cathie Wood's ARK, but it's a little. ARK does provide opportunities. For example, in early September, there was an opportunity to buy ARK. Now, you could say, why don't you just buy Tesla in early September? And maybe you do, maybe you don't. But the fact is, this thing has been going up for a while. So if we look from April to now, it's up about 120%. Meanwhile, Tesla, not just this September period, which has been exceptional for a ton of stocks, but since April-ish, it's only up like 100%, depending on where you measure it, 90, 100%. So sometimes the ETFs outperform the underlying symbols. So sometimes it makes sense to buy an ETF, even though when you think ETF, if you're like me, you think slower moving and safer. So safer can sometimes be good. So that's the idea. Mag 7 is the idea. And if we look at these companies individually, there's not been anything super worrisome. OpenAI is gonna be in the conversation for all these companies. It's their biggest competitor. It's their biggest customer, maybe, for AWS, for Amazon. So for Google, OpenAI saying they're going to release a browser is not good for Google, right? However, Google Cloud also might serve some of OpenAI's requests. So if they're also partnering with Anthropic, which is Claude, which is a competitor to OpenAI, to ChatGPT, that's bullish. Meta is not providing cloud services for these AI LLM companies. And of course, there's always some lawsuits going on, but it's a huge company. And the main question that isn't listed here for Meta is, as far as I've seen, are they going to be able to compete? Is their Meta AI going to compete? They did open source this. I personally don't use it. I think Claude is better for writing, and ChatGPT is very similar to Meta AI in terms of speed. So I'm just one person, though. Microsoft, which gets 49% of OpenAI's revenue, which might not happen forever, but that might be good for Microsoft if they can't service all that demand anyway, doesn't have any major big news. Some report about higher profit margins for Xbox. That's actually a huge division, gaming. So that's Microsoft. Apple, they do have, well, they already had their Apple event, right, earlier in the fall, but all-time highs is really the story for Apple. So it's been a minute. It's been almost a year. And Amazon, lastly, I don't see anything here that's super big besides the sort of CrowdStrike-like scare of the AWS outage. So that was a big deal for sure. But if we look at the chart, that was basically 3-4 days ago. So that was on, today is the 26th, Wednesday. It wasn't anything like CrowdStrike in terms of stock price impact. So this is the tiny little red day. On Wednesday, if we look at Wednesday in the SPY, it was also a red day. So it really didn't appear to have any impact on Amazon's stock price. Meta was, break even. So maybe some of these other Mag 7 names were break even when Amazon was down, but this is sort of what I'm talking about in terms of an outage affecting stock price. So this is when CrowdStrike, which makes security software, went down, and all the major airlines had to cancel thousands of flights, and the stock price got cut in half. So nothing like that happened to Amazon. With that said, maybe it's sort of nice to wait until Thursday for Amazon earnings and have the others report first, just in case that sort of sets the tone. But this is the ticker. This is the idea. Wait until Wednesday. And hopefully this, even with this gap up, doesn't get too far away from this pivot. So if you like these ideas, hit that like button. If you haven't hit that subscribe, hit that subscribe. And if you want to make $1,000 in stocks in the next 90 days or your money back, hit that join button or head to stockscommunity.com and take advantage of this offer. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Hey guys, let's jump into a little more Kevin here.
So we're kind of in this really kind of, dare I say, fantastic spot where the data and GDP are great, but there are lingering risks. Again, we'll talk about those in just a moment. But look at the Atlanta Fed real GDP, now just upgraded to 3.9% growth. Seems to be booming on all cylinders. Then this morning we got the US S&P Global PMI read, and they had a note about both manufacturing and services. And the note said the following: we had an acceleration of activity in October, the fastest, or I should say the second fastest in 2025, with improvements in both manufacturing and services, modest employment growth, and GDP consistent with 2.5%. Now, that's not as high as what we had with what we got in the Atlanta Fed real GDP numbers, but both of those are pointing really bullish. So the Nike swoosh is pointing bullish, which has been, frankly, bullish since 2022. There are lingering concerns, which are fair, and we're going to talk about those. And we've now got new S&P data, which is a private survey, which is indicating bullish for October. We expected CPI to come in low. This is really a surprise. Why else would Donald Trump release that? And then, but next month we're not going to release the CPI report because we haven't been collecting the data. He's already announced that. Like, the White House has already told us we're not doing it next month. And meanwhile, no jobs reports, because why not? And we're just going to rug the Fed on jobs reports because why? Some people in the comments a couple days ago were asking, Kevin, what benefit would Trump have of hiding the jobs reports? If he hides the jobs report and it's low, wouldn't that help rates come down? That's not all you want. What you really want is you want just enough data to get the Fed to give Trump his 25s, 25s, 25s. You can do that with the CPI. But if you're running the data, what you don't want is to panic the Fed with big negative job prints, because it's not just going to panic the Fed, it'll panic the job or the stock market, and then you have a crash, and then that unwinds Donald Trump's tariff trade or his tariff plans, because he loses a lot of leverage and credibility. Now, we're not saying that's what's going to happen, but it's worth noting that could be one of the reasons. If you happen to be a magician who wanted to control this, you want to give the Fed enough to give them 25 bip cuts because it keeps the markets going up, but you don't want to give them so much that the stock market starts going, oh crap, we're dropping into a recession. Now, we don't know that's what the jobs numbers are going to say, but it is really interesting because it does, at least for stock number 8, 9, and 10 that we add to the next 10-year best stocks to buy. Those are for the next 10 years. My opinion of the next 10 best stocks to buy, which of course we talk about in.
All right, guys, let's talk about the best stock to buy right now, in my opinion. And I think that's MongoDB. So here we go. If you have any questions, drop those in the comments on YouTube. Comments, questions, all of the above. And let's jump into a little breakdown. There is one stock that is about to skyrocket. Software developers love this company. This company has well-known, prestigious corporations like Goldman Sachs and Citi as its customers. And well, anything in the software space that's widely adopted and doesn't have huge customer concentration, this company only has 16% of its customers with over $1 billion in revenue. So this isn't like a ChatGPT company where if NVIDIA or a couple other companies stop working with them, they go up in flames. This is a company with a lot of different customers. The ticker is, I don't know if you've heard of it, MDB, MongoDB. Developers love them. They're a database, and they do more than that, but I'll be quiet before software developers get mad at me for butchering it. Let's jump into the chart. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little information about the company. They basically are a cloud database platform, among other things. And yeah, they are unprofitable, but not by a lot. So yeah, let's look into a little bit about what to actually do with this based on account size, based on earnings, and based on this chart. So here's what we got going on. This is the recent earnings. And you can see that this idea of when there's a bunch of volume that comes in on earnings, buying on earnings and risking, in this case, it's more like $10. It's a $300 stock, but risking, a couple few percent can be a pretty interesting idea. It does have some room to the upside, and it did get there pretty quickly. In a week or so, you got a maybe 10% push, which on a company that's a $300 stock, it is a big move. Now, looking at the chart again, little detail is the volume is not very massive, right? I mean, it's like $1 million volume. It's not a lot, but because it's a $300 stock, it is $300 million volume a day. So it's enough for anyone who wants to put 3 million or obviously less in this company. You can do that pretty immediately. As soon as you pretty much wake up and hop right in there, you can look at a 5-minute chart, and you're not going to move the stock. So I mentioned that because that is pretty relevant to some of the stocks we trade, we invest in. The more I use the word trade, the more you have to be a little bit careful. Some of these companies, here's an example that people talk about, like maybe this starts to look interesting to you. It doesn't look interesting to me really, but you have to be careful. This is only less than 500,000 or so of volume, $2 million a day. You can't really put more than $20,000 in a 10-15 minute period in this without completely moving the stock. So if you're looking at stocks like this, don't do that. Look at ones that are much bigger, even if they're not the NVIDIAs of the world. So let's jump into a little more about MongoDB before I jump back into price levels and talk a little bit about why you want to invest in a stock that's been so choppy because of this most recent move. So here we go. This is some considerations, right? Net loss, some insider selling, and we can look into exactly that insider selling, but I think in general, it's not usually a big deal. A lot of insider sales are automatic. It doesn't even show up on this dilution tool. So like if you have options that become available or a lockup period that allows your shares to be sold, then you might sell your shares. You might have a schedule to sell your shares that is pre-scheduled. So it's not related to the stock price. It's not related to recent news. So the whole insider selling thing, it's not as important as it sometimes gets talked about. Over 500 million in revenue, up almost 25% year over year. And it's a subscription as a service revenue almost entirely. So that's the real deal. As far as other companies, other peers, I think they've all been sort of sideways. I mean, Salesforce hasn't looked great. ServiceNow hasn't looked great. The companies that are most similar to AI, Snowflake doing better. The cybersecurity companies are doing well. CrowdStrike, Cyber, the only exception, Zscaler being Rubrik. But outside of this, Cyber's been doing well. So why buy MongoDB? Well, it's holding above this volume. And as long as these people are in the money, they're making money, the price is above where they bought it, they're unlikely to sell or not likely to sell very much. So let's look into a little more about some of their customers. Talking about Toyota, Verizon, Cisco, and the banks that I mentioned, Goldman Sachs, Citi, Barclays. And you might say, well, is investing in database really a good idea? And it is a good idea when they're adopted so well among these brand name companies. And when, like I said, developers really love this company. So this is still, moving from a relational to a non-relational database is an ongoing decade-long change. So this is a NoSQL database. This is what MongoDB offers. This has been talked about for decades. It was interesting to developers decades ago. Maybe 1 decade ago, it really became hot. But now it's reaching enterprise scale. So this is a benefit. As I mentioned, only 16% of the customers are over $1 billion in revenue. You don't have that concentration. Like, well, I use ChatGPT as an example, but NVIDIA would be another example. Of course, NVIDIA also being a darling of the stock market because all the money flows through them. But in general, you don't want a ton of customer concentration. And maybe MongoDB, you'll sort of find that sweet spot of large enterprise contracts and having a lot of customers. So they definitely have the bottom-up approach. They kind of like how GitHub, Microsoft acquired GitHub for like 20 billion or more. GitHub was able to get so big because its customers worked at these companies, but they weren't the decision makers, right? They were the developers and they loved the software. So MongoDB is kind of like that. But if they can also get the decision makers on board to get some long-term contracts, then they'll really have everything. But it's definitely easier to get the decision makers on board when the people who actually use the software already use it. In my opinion, maybe Salesforce is, a reason that is not always the case. But yeah, this is definitely something that the internal teams like. Now, do they have competition? They do. I think they have a lot of open source competitors as well. But if I'm not mistaken, they also came from open source. And a lot of these enterprise customers need security. And they honestly, I think they need to be able to sell something to their higher ups. And so saying you're using open source doesn't always go well. It's like, what? You're using something that's free? That can't be very secure. So they're figuring it out, and they're moving up market to these customers, these companies, higher ups. And yeah, that recent earnings, like I mentioned, up 25% year over year in revenue. And that database revenue is making up most of that. And 70 million in free cash flow, which is a huge improvement from a year ago. So these are the companies that I took a look at. Dropbox and Oracle also on that list. And just to take a quick look at Dropbox, not something that's super investable at the moment. And then Oracle has sort of been whipsawing that OpenAI deal. Great for the stock price, it seemed like. And then when it was revealed that they weren't having a very high margin through leasing out those GPUs, the stock sort of came down. So it's hard to see what's happening here, but I don't think these are really great indicators of what MongoDB is going to do anyway. I think this is sort of a game-changing revenue result. If you look at some of these other earnings, they were not really game-changing earnings results, at least in recent history. You know, maybe back here this was somewhat interesting, but the stock sold off. So all you and I really have to do is say, look, stock moved up. There's a risk level here. It's holding above that risk level. These moving averages are coming together. It's coming up when those come together. And that's a bullish sign. So you can risk, I don't know, $10 to make 20, 30. That's the idea. MDB is the ticker. If you like these ideas, hit that like button. If you haven't hit that subscribe, hit that subscribe. And if you want to make $1,000 in stocks in the next 90 days or your money back, hit that join button or head over to stockscommunity.com. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, guys, let's jump into a little bit more. Kevin?
In the Meet Kevin report, we've already released the first 7. We've got 3 more to go. Remember, if you're not part of this yet, use the link down below. Just go to meetkevin.com. You join once, you get all of the courses. You get all the lectures, the new lectures, archives of all the course member live streams. You can go back and look at the alpha reports, and you can not only get the new ones, but also the archival ones if you want to see. No, when we go live in the course member live stream together, we build them out together, and so you could see, okay, yeah, Kevin, like this, like I had course members yesterday, they're like, all right, like, I didn't even mention it. I've just mentioned it so many times. I'm like, guys, 414 line on Tesla. Like, they don't even need to mention it. They know because they're learning by using the alpha report. Look at that. Yesterday, what did you get after the open? 414. Bounce within 10 cents of 414. Actually, within 60 cents of my line. But, dude, look at that. It was straight up after that. That was really impressive on a bounce there. Today, we were actually bullish CoreWeave and MP Material for a bounce because they've been selling off so much, and CoreWeave's up 7% today. It's kind of remarkable. Now, the risk, of course, for any interest rate trades was that the 10-year Treasury would go up. Okay, well, why did the 10-year Treasury go up? Because we got a good inflation report, right? Not enough. Because that super core level is actually running at the hottest level that it's been running in about a year. It's running at 2024 levels. So super core still decently excessive or aggressive. And this is probably the hardest one for the Federal Reserve to kind of put a lid on. So yeah, we're seeing tariff components pop up, like household furnishings up the most since the middle of 2023, audiovisual equipment up the most since 2021, super core services skipping 25 paces for going to the highest pace in 2024. Not great. We got our cost of living adjustment for Social Security at 2.8%. So all of these numbers obviously well above 2%. And it's nice that owners equivalent rents are anchoring Donald Trump's tariff inflation down, but Trump's tariff inflation is showing up. We know that. Owner's equivalent rents, because rents are flattening, that doesn't mean they're falling. They're still ridiculously high, right? But because they're flatlining in a lot of areas, it's enough to get the Fed to give us 25s. Now, the Fed pricing right now is actually indicative of more than 2 cuts this year, but not by much, which is really interesting. If you look at the current futures pricing, let's see if I can pull it up here. Futures pricing right now has a 96.7% chance of a rate cut next Wednesday, which is pretty much guaranteed. And then we actually are pricing in a slightly more than 2 cut opportunity for December 10th. Now, it'll end up being 25 and 25 and a nothing program. Maybe we'll get our jobs data at some point this year. I expect it'll either be right before Thanksgiving or right afterwards. It'll be this year, we'll get it. But that's probably the leftover pisser for any of the bears. It's jobs in China. Now, you already know that. Now, we're supposed to have the Trump meeting with Xi Jinping next.
Let's get back on track here. All right. Applied materials. This is the chart. Longstanding customer is Intel. Okay. Apple also a customer. So those are pretty big customers. And this is the semiconductor ETF, SMH, that they're a part of. Intel has moved up a lot. NVIDIA, AMD, just had that OpenAI deal. AMAT, looking good. Time for break time. There's one stock that is about to jump up in price. This is a semiconductor stock. Semis are doing super well. You can look at AMD's recent deal with OpenAI that made that stock jump up more than 15%. NVIDIA recently hit all-time highs again. And the semiconductor ETF, SMH, of which this company is a part of, is also super strong. This company, the ticker is AMAT, has Intel and Apple as its customers. Intel also jumping up in the last couple months with that 10% government stake. So let's jump into the details on AMAT and why this is the semi stock and the stock to buy right now. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is the chart right now. You can see after this earnings reaction, AMAT's recovered, and now we're just sort of surfing along these lines here. That's an awesome, awesome situation to be buying in. And you can buy here and risk $5-10 and make 10, 20, 30 and more. So super, super low risk opportunity. I don't know always that you want to buy stocks that have slight relative weakness to the market, but it's only slight. You see these green days were super, super strong. And if we look at NVIDIA with an N, super, super strong green days, pretty much a mirror of the market, which is usually the case. to have the biggest companies mirror the market. So if we look at AMAT, Friday was a little less strong. But the great thing about that in this case is that what it meant is that you can still enter this stock really close to this line. So it's actually nice to have some additional selling in here, because when that pressure gets lifted off, this is going to be like a bouncing ball, a tennis ball, and you push it underwater and it just rises right to the top of the water and maybe jumps out of that pool a little bit. So that's sort of what's going on here. Earnings is in a couple weeks, but don't have to worry about that right now. This is just very attractive in terms of risk reward, which if you look at your phone, your computer every couple days, or every few days, that's what you want, risk reward. You could talk about how Amazon has the humanoid tailwinds behind them, and this is going to be the next $4 trillion stock with NVIDIA. That's great, but would you want to buy it right now? When it's above the 200-day moving average, but it's sort of sloping down. It's super choppy. Not only that, it has earnings on Thursday. So it's really important to not just have a macro thesis about a company, but also to say, you know what, right now is the time to buy it, in my opinion. So let's talk about some macro, some fundamentals about the company as well, because we do want to know what we're buying. They do have $7 million of revenue, almost 10% increase year over year, and $2 billion of free cash flow. So that's good. And I don't know exactly how important AMAT is compared to other semiconductor companies, and I don't know exactly how much these export restrictions are going to be a problem for them, but I do know that they're sort of dealing with it. Okay, so this is not good for people who work there, but it's good for investors. It is what it is, and they did that restructuring, and that's sort of baked in, I think, even though that might not come out until the next earnings, which if we look at the chart, we can see that exact date is November 13th. So this is sort of a pre-earnings idea, although if earnings are great and you still hold some of the stock, if you get in before then, that's obviously a nice little push, although I don't think it's a good idea to hold a big position unless you have a cushion into earnings. So a little bit about their customers, right? Intel use it for their fabs, and I did mention Apple, but also TSMC uses them as well. Advanced chip production, of course, advanced. Samsung also uses them, and then Apple. These are the chips for the iPhones and Macs. Uses their equipment. Boeing, maybe it doesn't have the greatest reputation right now, but it's still a massive company, and they use them. So this is a materials company, Corning. Now, I do think it's important to look a little bit at some of these other companies that are in the semiconductor ETF. So AMAT is in this SMH ETF. It's about 5% of the ETF, but it's nice to know that other companies in an ETF are also doing well. So this is the ETF. I already looked at the big ones, AMD, Intel with that government stake, and then NVIDIA also doing pretty well. There are other ones as well, LRCX holding up. This is relevant because they just recently had earnings. So if we look at Q2 earnings, they were sort of all over the board. The reactions weren't great. This reaction on LRCX wasn't until September when the market as a whole went up. The actual earnings reaction wasn't great. So you can see a couple days after, it sort of just went sideways. So this is just one stock. It's not a big deal, to extrapolate this to all stocks or even all semi-stocks, but it is nice to see this moving up after earnings. And NVIDIA is the last to report, but AMD will be in there in a couple weeks. And then Intel, this isn't great, okay, but it's still above where it was before earnings. If we look at, a chart, we can see that pretty clearly. It's pretty much where it was before earnings currently. So, did it sell off? Yes. Is that a big deal? I don't know that it's a big deal. So here's AMAT right now sitting here, coming into earnings on the, what is this, the 5th? The 13th. And then looking at a couple other semi-stocks that I just want to mention here. These are sort of smaller ones, but TER, KLAC, and ASML is a pretty big one as well. So we should definitely look at ASML. ASML, $1,000 stock. This is the earnings reaction so far. Fine, holding up, pretty good. Slow moving stock, but solid. TER hasn't had earnings yet. Sort of looks like all these semi stocks moving up. This was obviously the day that was bad for all stocks, so no big deal there. That was the Trump down day a couple Fridays ago. KLAC earnings on Wednesday. So if you do get a chance to look at the reaction for KLAC before you check back in on AMAT, I think that would be a good idea. These companies they're different, obviously. I don't know how different they are, but if you can get a handle on how other semi stocks are doing, then that's super helpful. And if we just look sort of at what stocks are doing well, Mag 7's definitely doing well. And we can see that about half of these are going to report on Wednesday, and then some more will report on Thursday. There are some software stocks, MongoDB doing well. As far as stocks that just had earnings very recently, CRS holding in there. Another one is GM to sort of get an indicator of how this earnings season is going. Pretty solid. And then the big one for these chip stocks, IBM, that I haven't even mentioned yet, just because it's so big, sort of forgot about it. It's slow moving, but it's recently not at all slow moving. Sold off, reclaimed that whole level, and then reclaimed even more. So this has been a pretty awesome reaction and definitely positive for the semis. So that's sort of the peers right now. This is the setup, and this is the date you want to make sure you're aware of, November 13th. That's the idea. If you like these ideas, hit that like button. If you haven't hit that subscribe, hit that subscribe. And if you want to make $1,000 in stocks in the next 90 days or your money back, head over to stockscommunity.com or hit that join button to see the details. You must have $25,000 or more to invest. And one way or the other, I will see you soon.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, guys, so let's jump into a little more Kevin here. Let's see if we can get that going. I do know that
Thursday, we'll see how that goes. Either way, I would bet on a taco.
There we go.
And so far, the data that we're seeing on state-based unemployment claims that are sort of coming out weekly, since we're not getting the federal data weekly, they're not indicating some sort of major shock to employment. Yeah, we just had announcements of layoffs and white-collar jobs. Amazon says the robots are going to take over. Elon says the robots are going to take over, and I'm going to be a trillionaire. And yeah, you've got some layoffs at Target and otherwise, but none of those are enough to really offset what is actually still some hiring happening before the holiday season. So far, so good. Now, that actually adjusts in my opinion, with this data that we're getting here, the bear bull scale. My biggest fear has obviously been the rise of 27 weeks of unemployment. But if we soft land here, then that will just prove to be wrong. It'll have proven to be too conservative. And it would have made more sense to be more aggressive going into, well, frankly, the continuation of the Nike swoosh recovery, especially since we're not even at euphoric levels of the Nike swoosh yet, which is crazy to think that there could be a whole nother stage to this. Wild. Yes. So where do we stand with all of this? Well, look, I'm really excited because you know me personally. I have built what I think is an amazing baby of a real estate startup that has no debt. I just announced that I personally am also debt-free. Got some more videos coming out on that. But we also just launched the total rebrand of the House Hack website. I still wear it because, you know, the corporate name is still House Hack. It's the same thing, House Hack Reinvest. We just think this is such a cool name because it's like real estate invest or reinvest your money into diversified American real estate. But what I wanted to show you about this is on reinvest.co. Yeah, I didn't pay the $1 million for the M. But on reinvest.co, it's amazing this brand is even available. And so we snagged it. We're like, oh, this is going to be an awesome app name. We listed our app. And so you could see sort of some of the graphics for what our projections, I shouldn't say projections, but what our hopes are for our timeframes for the app, for revenues for the app, where our pricing might end up being, how we're going to give notifications. It's all about wedge deals and helping people build their net worth with AI and our custom MLs. Some of y'all had, by the way, really, really smart questions like, hey, Kevin, you know, you said you're running your own Blackwells with HouseHack/Reinvest. Why? Like, is that cost effective? The answer is yes for our training. So when it comes to the ML, the very niche ML training that we're doing, we can actually utilize our own Blackwell chips in a very cost-effective manner, probably about 5 to 10 times as cost-efficient because of not being in a rush to utilize this ML training, so we don't need as many Blackwells. And the Blackwells we're using are efficient enough. They're actually more efficient than some of like the 4090 chips, which obviously are, you know, fractionally as powerful. But the Blackwells are ironically more efficient than some of those chips, which is like mind-blowing on an energy basis. So long and short of it, we do some of our ML training locally, but when it comes to inference, when we actually run this app, it's all going to be cloud-based because it needs to be fast. We can't have latency from sort of in-house Blackwells and waiting for them. We're not going to do that. But
okay, let's do some deep learning here on this NTLA CRISPR stock. Here we go. ARK actually holds NTLA. Kathy Wood owns this CRISPR stock. They do have a partnership with Regeneron. Recode, I've also heard of them. Therapeutics. Is Regeneron connected? I know Regeneron's a big company, so I'm sure they've got some big connections here. Let's see, Microsoft, there we go. And 23andMe. Oh, they acquired 23andMe. Okay, well, I don't know if that's bullish or not, but here we go. If you're on YouTube, I can see those comments. Let's jump into a little breakdown here. For NTLA, the CRISPR stock. Okay. There it is. there's one stock that is about to explode in a good way. It is a CRISPR gene editing stock. CRISPR is very cutting edge, innovative technology. And this company, this ticker, has partnered with a biotech company that is collaborating with Microsoft to house its data, and also working with this company. It's called Regeneron. It's a billion-dollar pharmaceutical company. Regeneron did acquire 23andMe, which you may remember as the data sort of ancestry kit company. So some mixed feelings probably about that company as a consumer, but the connection to NTLA is a big one. And the connection to Microsoft is positive for a smaller company like NTLA. So that's the ticker, NTLA. It is a CRISPR company. And let's jump into the chart right now. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is Intella right now. This is why it's so interesting. Looking at this chart, you can see 25 is a whole dollar level. A lot of people see that number. It just is very grounding, and you can say, hey, I'll buy it at 25, I'll risk $1 and try to make 5, 10. If that sounds simplistic, well, simple is reality. Simple is not easy, but in a lot of cases it is reality. And this company is small enough that there is a lot of retail investing. Retail's way bigger than it was a decade ago, way bigger than it was 2 decades ago. It's almost bigger than a lot of the people who do this professionally. I'm not talking about passive investors like index funds, who just buy these automatically. But I mean, in terms of people professionally investing, retail is a big part of that right now. It's might be the majority in some of these stocks that are less than, say, $50, or more accurately, a few $100 million traded per day, like NTLA. So that's the opportunity, that's the level. And if we go back and look at a little bit about this company, we can get a handle on why it's interesting, why the move is so good right now. In September, which was a great month for the market, seasonally, people are always saying that September is not good, and this September was awesome. So you just have to look at what's in front of you, really. Intella announced positive longer-term phase 1 data for its CRISPR therapy. So stock went up. This is their partnership. They've expanded it with Regeneron for in vivo gene editing therapies. Don't ask me the difference between in vitro and in vivo. I think in vitro is in eggs. In vivo might be in the actual... I'm going to shut up now. This is not my expertise. But look, they do CRISPR. CRISPR is super hot, and this is what we shine at, right? If we look at its peers, CRSP also had a similar move. What is this? September, and then the last couple weeks it's been chopping around, but it's definitely up a lot since August, 100%. NTLA, same difference, or actually more. But if you're looking at flags, which is what is useful on a shorter term, midterm, couple week time scale, there's definitely one there. Whereas CRSP, yes, it's great to have a peer doing well to show there's some strength in the sector, but it's not easy, super easy to draw a flag right here. And if anything, you know, that flag looks like it's not super going up. But maybe if this can undercut down to here, it gets interesting. But earnings is coming, it's getting all murky. So there's a reason we're talking about NTLA. Earnings aren't until the 10th of November. And yes, it's kind of channeling, you could say. But at the same time, if we zoom in, you can definitely see that this was an important $20 whole dollar number level, psychological level that it got over. And now there's another one up at 25. So I'm not going to get too stuck in drawing lines on this chart because they're pretty clear. They're whole dollar levels, whole $5 levels, actually. Beam is another one, and Edit is another one that are using CRISPR. CRISPR-Cas9 is the exact name for it. And that's been, you know, talked about in the New York Times for decades as a super exciting research area, but only now is it becoming commercialized. So Beam, a little squirrely. I was going to say slow, but it's really not slow. It moves 10% a day, whereas NTLA, you know, is the same. I just don't really love this one as a buy because it just went sideways for so long here. So it really has to get over this, all of these buyers back here. And then another one, Edit, also moving up. This is total penny stock. So there's really not much volume here at all. This is not worth looking at. So NTLA is definitely, you know, by processor of elimination or what, the stock to look at. Yes, it also, not unlike Beam, does have a sort of bunch of buyers over here that has to go over, but this is now over a year ago, you know, 15 months or more. So it's sort of shades of gray, I guess. This is like, it's not really shades of gray, actually. I'll stand behind this statement. These are 6 months ago. So these people are a lot more likely to still hold the stock. So as it gets up here, they're more likely to sell. Whereas with NTLA, these people are a lot more likely to have sold down here. So they're exhausted. They've distributed their shares among all of these new buyers. And now it's getting above all those buyers. And so there's going to be less selling pressure. So that is very much a psychological reason, a chart reason, a price, supply, demand reason why this is a better bet right now. 100%. So you do have a level to risk off of. It does have to get above this 28 high. But the last couple of days, and this is another, you know, supply demand reason to buy it, is the market was strong the last 2 days. NTLA was not. So if this were in a bear flag, you know, a flag that's going down, like CRISPR, maybe it wasn't such a great idea. It is not such a great idea to buy CRISPR right now because this is not as strong as the market. I'll just show the market right now just to make sure. Let's see how strong the market was on Thursday and Friday. So this is not as strong. So it's possible, even though the market's gapping up right now, it's Sunday night. If it does sell off on Monday, this thing could sell off because it's been sort of weak for the last couple weeks. Whereas when I look at NTLA, yes, it's also been weak on Thursday and Friday, but the benefit is the weakness is actually helpful because it brings the stock right to this line. So if it does, it is going to gap up. It is gapping up. I mean, most likely NTLA is going to gap up because the market's gapping up. You can see that right there. This is Sunday futures opening. And if we look at some other companies, you can see, or you will see them start to trade. The ones that have overnight trading. NTLA probably doesn't. That's like a level of detail that I think is unhealthy, so to obsess over. But the broad strokes is this is going to gap up probably. Even if it sells off, you still have this level to buy it off of. So when you've got a flag forming over a couple weeks, it's okay in my opinion, to have some relative weakness to the market. It can even be helpful when it brings the stock down to a level where it's right here. Whereas if this thing went up a couple of days like the SPY, it's more likely that it might sell off a little bit. Like, we'll see what happens, but NVIDIA might sell off a little bit after this gap up. So that's the super details for the next couple of days. The broad strokes is there is earnings on the 10th. The peers are doing well. Keep an eye on those peers. Remember those CRSP, BEAM, EDIT is, super liquid, but maybe still worth keeping on your radar for news. And NTLA is the idea. So if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to make $1,000 in stocks in the next 90 days or your money back, head over to stockscommunity.com. Check out that opportunity. If you just want to learn more about these trading techniques, I do have a $1 course you can try as well. Someone just purchased that course as I'm making this video. So check it out. There's something for you. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's see what else Kevin has cooking here. Where are we at here? Uh-oh, now we've truly lost him. Well, we're going to have to pull him up over here because this computer is just hyperventilating. Let's see. In 5, 4, 3, 2.
So good. Now, that actually adjusts, in my opinion, with this data that we're getting here, the bear bull scale. My biggest fear has obviously been the rise of 27 weeks of unemployment. But if we soft land here, then that will just prove to be wrong. It'll have proven to be too conservative. And it would have made more sense to be more aggressive going into, well, frankly, the continuation of the Nike swoosh recovery, especially since we're not even at euphoric levels of the Nike swoosh yet, which is crazy to think that there could be a whole nother stage to this. Wild. Yes. So where do we stand with all of this? Well, look, I'm really excited because you know me personally. I have built what I think is an amazing baby of a real estate startup that has no debt. I just announced that I personally am also debt-free. Got some more videos coming out on that. But we also just launched the total rebrand of the House Hack website. I still wear it because, the corporate name is still House Hack. It's the same thing, House Hack Reinvest. We just think this is
I think we already saw that.
How we're going to give notifications. It's all about wedge deals and helping people build their net worth with AI and our custom MLs. Some of y'all had, by the way, really, really smart questions like, hey, Kevin, you said you're running your own Blackwells with House Hack /Reinvest. Why? Like, is that cost effective? The answer is yes for our training. So when it comes to the ML, the very niche ML training that we're doing, we can actually utilize our own Blackwell chips in a very cost-effective manner, probably about 5 to 10 times as cost-efficient because of not being in a rush to utilize this ML training, so we don't need as many Blackwells. And the Blackwells we're using are efficient enough. They're actually more efficient than some of like the 4090 chips, which obviously are fractionally as powerful. But the Blackwells are ironically more efficient than some of those chips, which is like mind-blowing on an energy basis. So long and short of it, we do some of our ML training locally, but when it comes to inference, when we actually run this app, it's all going to be cloud-based because it needs to be fast. We can't have latency from sort of in-house Blackwells and waiting for them. We're not going to do that. But it's really exciting because to me, I'm like, dude, if we're going to Nike swoosh and we're going to go euphoric rally here and everything's going to kind of keep booming, this fine with us, man. This will be the most fantastic environment for growing our AI product. And we're like, dang, if we could soft land here, maybe we can move up our IPO schedule. I just sent a message to course members yesterday. I'm like, hey, should we do something here with revenues at House Hack where, not only can we offset a lot of our operating expenses beyond what we're already doing, but we might be able to utilize some of that to reinvest more into real estate, our AI. And
let's talk about steel. It's not AI. CRS Steel Company. I can see Alcoa connected to them. I don't know about either one. Alcoa is a big company. Almost a quarter of their accounts receivable, I think that's like income, pretty much income is from Alcoa. So additive manufacturing, they've collaborated with NASA's Jet Propulsion Laboratory for space exploration. Okay. All right, let's jump into a little breakdown here for CRS Carpenter. This is definitely an off the beaten path stock, Carpenter Technology Corporation. Okay, here we go. There's one stock that is about to move up in price. The company recently had earnings and is up significantly from that earnings. Q2 earnings was not great for most of the market. So to see GM do so well, to see this stock do well, it's bullish. The company is Carpenter. CRS is the ticker. They have collaborated with NASA's Jet Propulsion Laboratory on alloy materials for their Mars rover. They also have Alcoa as one of their biggest customers. Almost a quarter of their accounts receivable is from Alcoa, which is a big steel company. So let's jump into more about the stock. Make sure they don't have huge customer concentration. Although if you're NVIDIA, it's a good thing, right? Because your customers are Meta or Amazon or ChatGPT. This is not financial advice, but I think CRS looks pretty good, and this earnings reaction is awesome.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is the stock chart, and you can see that big volume move up here and the day two reaction. So it's definitely holding. There's plenty of volume here, and it gives this nice level around 300, pretty much exactly at 300, which is a super whole $100 level that it just happened to close at. Everyone sees that, so it's like a self-fulfilling prophecy. And now you just have to decide if the market gaps up tomorrow. Well, it is gapping up. If it stays gapped up, is it worth buying this CRS if it's up in these 320s, knowing that 300 is probably the best level to risk off of? You could also just risk off of yesterday's high. That's a super conservative approach as well. So 315. So let's back up a little bit on why I'm talking about a $300 stock. Look at this move. In the past few years, it's up almost 1,000%, depending on how you measure it. But if you look at the 1-year chart, it's kind of had some relative weakness for the past few months compared to the market you see there in the background. And now you just have to decide, after this big earnings move up, can you risk 300? Can you risk 315? Are you risking all the way down here? What kind of risk is healthy to take depending on your tolerance? And are you comfortable putting money in this company, which is not a high-flying AI stock? It's a materials company, a materials refining company. So let's look exactly at what it is and look at its recent earnings. So here's the revenue, over 700 million, 30% year-over-year increase on operating income. So it did well, 40% increase year-over-year on that earnings per share. I don't know exactly how this earnings per share works. Like, this could be a little misleading based on dilution or based on buybacks, or I'm not going to dwell on that. But guidance is good. So that's super positive. And then the CEO saying there's strong demand in aerospace, defense, medical, and power generation. So aerospace, I'm thinking Boeing, I'm thinking SpaceX, I'm thinking a lot of different companies, but more recently, in terms of aerospace companies, ACHR and Joby come to mind. So these are the electric vehicle, vertical, that's the EV takeoff aircraft companies. And they have been in this category of stocks that have just taken off pretty euphoric moves recently. This was in September. This had a big move up, gave back some of it. And then, of course, the quantums, RGTI, IONQ in that category. The Bitcoin miners turned data center plays. Iron, Cipher, Hut recently pulling back some, but huge euphoric moves. And then as well, the rare earth companies, UAMY, CRML, USAR, definitely coming back down to earth. All this to say, there's been a plenty of euphoric opportunities in some of these risk assets. Open Door as well, crazy run after pulling back and then having earnings, and has another earnings coming up. Rather than gambling on how these are going to move on earnings when they do have their earnings, some of them are so small, I'm not even sure these earnings are going to really mean anything. CRML, doesn't have it at all, I don't think. So they just might have like financial results reported or something like that, some type of sort of non-earnings event. But the point is, these are penny stocks, right? And so why am I talking about massive stocks like CRS? Well, because it's earnings season, right? And if you're looking for the smoothest moves with the lowest risk, and what do they say? Fast is slow, or whatever, slow is smooth. You're going to have to check that Army quote on me, but I'm pretty sure it's something like that. You want slow, predictable moves, and CRS is offering that low risk reward opportunity in the same vein as a GM, okay, recently. This is what we're looking for, is you can risk $66 or whatever, and then you just get $3 initially. It moves right away from your risk. You can buy this. You don't have to look at your phone. You don't have to look at the market. You don't have to worry about some type of massive gap down. Like, some of these stocks are just super choppy. I mean, this is recent light, went down 6% in a day. This AMSC, sure, when the market turns up, they move up with the market, but they're also very difficult. 9% down moves. So some of these are gonna pan out for sure, but in terms of ease of buying, I mean, the worst offender being CoreWeave, definitely just wick, fail, wick, fail. They may have had big runs in the past, but right now these are just very punishing. And so the whole sort of speculation sector has been pulling back. Perfect example, Plug Power pulling back. So all that to say, in a roundabout way, there's a reason some of these other stocks are on radar right now. So I could talk ad nauseum about what alloy materials mean, what Carpenter does, how they work with NASA's Jet Propulsion Laboratory. But if we're being real here, this is interesting because a lot of other companies are not interesting right now because they've already ran in the past month when the SPY went on an absolute tear. Yes, it's been on a tear since April, I should say, but August pretty much went sideways, right? For an entire month. And then only in September did we get another big move up. And now we're coming back to all-time highs after this looks super smooth, but I promise you, it did not feel that way. And if you were looking at your portfolio, it certainly didn't feel that way either, with this big move down a couple of Fridays ago and then a couple down days since then. So that's the idea. CRS, that's the level. And I don't think you have to exactly know what they do as far as manufacture of specialty metals. It's a big deal to know that they have that collaboration with NASA. It's a big deal to know that they have Alcoa as one of their biggest customer. So now you just have to say, is this company basically worth investing in compared to these other similar peers? So STLD is definitely one I've seen, a steel company. So if you take a look at that, recently had earnings, moved up on earnings as well. So the sector is definitely looking good. This isn't a sensational earnings reaction, but it's pretty good so far. This one is pretty liquid comparatively. CRS is like maybe, I don't know, maybe double. They're closer than I initially thought, but this one's definitely more liquid and the reaction definitely looks cleaner than this one for sure. So that's the idea. Those are the levels. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to make $1,000 in stocks in the next 90 days or your money back, click that join button. You can actually join on YouTube now. I've enabled the memberships feature. You also see a course for $1. You can join that on YouTube as well. Just read those instructions, send me that email, and I'll send you that course. It's $1. So I just can't directly host the course on YouTube. Still figuring that out. Hope that helps. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, that's CRS. I do think it's interesting. AVAV, the last one to cover here. Let's see what else Kevin's got cooking here.
And accelerate IPO timeframes.
Wrapping this up.
And the vast majority of people are like super excited about that. So we've got a lot of really exciting things cooking. Now, obviously, this probably means that, this idea that bond yields are going to fall or TLT is going to run before Halloween is not going to happen. So we're going to have a cool Halloween setup. But that's okay. It's okay to be wrong. Can't always be right. Knock on wood, the Alpha Report has been smoking lately, so people have really been enjoying that and sending us messages about how quickly they're making money to pay for their investment, even though the investment is a tax write-off anyway when they join the Alpha Report. But broadly, I do believe Donald Trump is going to taco with China, And the biggest risk is that employment data, but we're not going to see that employment data for quite a while. Now, if you want, what you could do is you could actually go to meetkevin.com/data. I'm going to update the bear bull scale here. So go to meetkevin.com/data and you'll see some links to the latest House Hack videos. You'll see the Trump taco scale. You'll see the bull bear or bear bull scale. And what you'll also see is I want you to sign up here potentially to the Daily Wealth here if you want. So drop your email in here for the Daily Wealth. And I'd love you to be part of what we're doing with the Daily Wealth. You can get it through the Meet Kevin app, or you could get it via email. If you drop your email here, you'll get it through email. And I think it's absolutely fire. And so if you're not part of that yet, consider joining this. But anyway, go to meetkevin.com/data and get my latest update on the bear bull scale. All right, folks, we'll see you in the next one. Good luck out there.
Is it
Pretty
beta?
wild,
Is it
wild
data?
position that we're in. And
Doesn't
it
matter.
just sort of makes us scratch our heads like, man, what's Donnie T gonna do to derail this? Because right now, this is good. Again, though, which one jumps down are gonna say, and what's gonna happen with China? It's the leftover risk.
Why not advertise these things that you told us?
All right, let's jump into a little breakdown here of AVAV just in a second here. Pretty interesting. Defense and aerospace, $100 million Army contract. Just 4 days ago. So, yeah, definitely interesting. UA unmanned aerial vehicles. I think I'm saying that right. Unmanned aerial vehicles. Why does that sound right? Unmanned aircraft systems. UAVs is aerial vehicles, right? All right, it's getting late. I'm joking around. Something's not right. Okay, let's jump into a little breakdown on AVAV. Arcat and KTOS in the conversation as well. Here we go, breakdown time. There's one stock that is about to skyrocket. It is an unmanned aerial vehicle, unmanned aerial system company, and they recently, within the last week, had a nearly $100 million deal with the US Army. So it's the right time to take a look at this stock. Even without that deal, the chart was already looking interesting. So when you get a technical factor combined with a fundamental reason to buy at a time when it's not easy to buy stocks, it's the middle of earnings season. I'm not one to gamble on what earnings are going to be. I don't have the credit card data. I don't even have the like checkout data that you can buy online for some of these companies that process payments online. I'm just working off of ChatGPT and a little bit of dilution information and the chart. So let's jump into what that means. This is not financial advice, but I think this ticker, it's AVAV, is ready to go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is the chart, and you can see how good it looks just within the past week, and how clearly you can have a level here where it's had some big moves up, right? But let's say that this is where we're at right here. You know, you just can't buy that. You don't know, maybe you're risking here, but it's gone up 5 days in a row. I know these days are bigger, but this is a little better, but it's still sort of channeling up, right? Just sort of like a stairs up. So it's only now that you sort of have, it's kind of a channel, but it's also coming down and you're getting a sort of rebound option. You're also getting this moving average catching up to these moving averages. So that's another indicator that a lot of people look at and a reason why this could move up. As for the Army contract, well, if we look right here, this is the 22nd. So that is right about here. The market as a whole was red that day, so it's not super surprising. AVAV was red as well. You have that contract, and now the market's turning up. So you have a fundamental reason, you have a chart opportunity developing, you have these moving averages converging, and sure, this thing, here's the elephant in the room for a lot of these stocks, is this is a 200-day moving averages screen line. This stock is 80% up, so it's like 12 times how much it moves on a daily basis, the daily range on average, from that level. So it's actually more like 16 times. I don't do public math, but it's a lot, right? So if you look at some of its peers, KTOS, sort of similar, maybe slightly less predictable, like when it's just ramping up day after day after day after day. It's really hard to position or sort of invest in a company like this because you don't know when that's going to end, and it's not as predictable. This is someone accumulating shares, whereas when we look at AVAV, it didn't look exactly like that. I mean, it kind of did, but I mean, it still has some breakout behavior where compresses, boom. Everyone agrees that it's worth more. So that's kind of what we're looking at. Some compressed days and then boom, a move up. So that's probably enough looking at these charts before we actually look at what this company actually does. So here are its competitors. KTOS is the Valkyrie jet maker. Another big one is RCAT, which does small UAVs. RCAT, I said I wasn't going to look at the charts, but I just can't help it because they actually show the buying and selling on them, the supply and demand. RCAT also has had some euphoric moves, but it's also just like a channel, to the upside. So could it stick on here and bounce off here? It could, but it's not as simple in my eyes as this AVAV, which sort of had a change in character here after this earnings when it turned up, breaking that downtrend. And then here, it looks like we got another change in character, however you want to draw the lines. It doesn't matter exactly where the lines are. I don't even like to draw lines that aren't horizontal for the most part. I'd prefer you draw lines that everyone can see. So here's a horizontal line, right? Somewhere in here. You basically see what I'm talking about. I'm not trying to make this more complicated than it is. It went up, it went down, and then it pretty much went sideways. So you can buy with risking $10 or something, 82 to 72, something like that, and then make 10, 20, 30, whatever it is. So that's AVAV, and we'll run away from the charts again for a little bit here. So here's the deal. These are the other companies. They've also had euphoric big moves recently. Not as predictable as AVAV in my opinion, but that opinion could change week by week. There's also big large cap companies as well. Also, Boeing, Lockheed Martin. Would it be great if these companies were turning up and doing well? It would be great, but they're so big that I kind of think of them as like the Pfizers and the Mercks. So even if Pfizer and Merck and Novo Nordisk aren't doing well, that doesn't mean you can't find an ALNY or an RTYM, RYTM, to still have some breakout opportunities, even when the big companies aren't doing really anything interesting. NTLA, another one in the CRISPR space that I've been talking about, that looks like it's poised to go. So AVAV, despite what Lockheed Martin and Boeing are doing, Boeing's actually, I mean, it is up 80% since August lows, but in the last 6 months, it hasn't done much of anything. AVAV still is interesting. Now, what else about AVAV? Department of Defense agreement is definitely big. And then this $100 million Army agreement is most important right now. But what's interesting is this Army agreement didn't really move the stock. So, as I said, it is nice to have a fundamental catalyst, but also it's possible that this was priced in. It's a little weird that it didn't move at all, right? Maybe it was completely known to almost everyone. And so the sell the news was very much a sell the news. It's hard to exactly compare it to the market, but we can't exactly compare it to the market. So this is what the market did. Green, 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 red, green, green. And you can see this red went below the first green in the last 5 days. And then so it's pretty similar. AVAV is pretty similar to the market. So interestingly, though, back on this day, AVAV didn't barely budge at all when the market actually cratered. So it could be, if we look at some of its peers, KTOS had already sold off, so that's not a great comparison. But what was the other one? AV, KTOS, and oh yeah, RCAT. Sorry, I can't believe I forgot that. This one did sell off with the market, so they kind of follow the market, kind of disconnected. It's hard to exactly say. These are sort of mid-cap companies trading like $100 million, a couple $100 million a day, and then an AVAV case, definitely in that few $100 million. Pretty liquid, so definitely nice to have the most liquid one of those three. At least definitely more liquid than RCAT setting up. Doesn't exactly follow the market, as we can see, so it's possible some of this selling was delayed from this market chop, and it's just how what happens is people see that their portfolio gets cut, and then they're like stopping out all of their stocks, and then they might even have to get rid of some positions that they didn't even stop out of just to free up some cash. So that's might have been what would happening here, even as the market went up. It's not exactly clear. It doesn't totally matter. All we can really say is that this looks great. It's setting up. And a lot of other speculative names, the irons, well, this is kind of recovering because it was so euphoric. It's hard to see at this. Now it's clearly clear how euphoric what this was and how much it unwound. Gold even, gold recently unwound, which took months for that to finally happen. But a lot of speculation names, Quantum's being the poster child for the unwind, did so. And so AVAV unwinding a little, not super surprising. It had been up a lot. And pretty much setting up again for a big move is super exciting. So that's the idea. If you like these ideas, hit that like button or say hi in a live stream. If you haven't hit that subscribe button, hit that subscribe. And if you want to take advantage of our make $1,000 in 90 days in stocks or your money back guarantee, click that join button. Try it out. Head over to stockscommunity.com. You can see some of our superstars results there. And I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.